Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Believe in the magic of tomorrow, and your spirits will be lifted on the wings of hope. Market-wise, let's take a look at it out here. We had the Dow Industrials up 165, Nasdaq up 32, S&P's up 18, gold contract down $8.50, trading at $1,072. Silver off 5 cents at $14.26. Both gold and silver pull back, lighter volume. Had a couple days of strength. Didn't dive off the cliff last Friday. Had some strength yesterday. Bottom line, gold 1,088 looks game. We'll see how we get into that number and if, in fact, we can get an expansion of volume as we get up into that number. Copper was down 3 pennies out here at $2.11 a pound. Light sweet crude just can't catch a bid. $36.14 on this contract. Not only the oil contract, the gasoline contract, folks. The gasoline broke out lows today. Yeah, it looks like we are going to have some very inexpensive gasoline, unleaded. Wholesale unleaded is $1.19 out here today. $1.19. How's that? That's pretty amazing. Bonds. What do we have with the bonds? 10-year down 11 ticks. 126.06. 30 off 28. 155.06. Both the 10 and the 30 pulling back with lighter volume. One higher price. King dollar. King dollar down 159 ticks at 98.21. The euro up 42 at 109, and the yen is trading at 121.03. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. We take a look at the SPY. What you're going to see at the SPY is this. You're up $1.84. You've come down. We came down on the 17th of December with 173 million. You come down on the 18th with 251. Yesterday, we go up and we do 101. Today, you go up and you do, or yesterday we did 99 million. Today, you did 101 million. Bottom line, that is setting up a nice ABC structure on the way down, taking you into the 195 area from the highs of October 2nd. Deviant holiday trading. It's nothing like it, folks. The Qs. What do you have with the Qs? Same setup with the Qs. The Qs came off the high. 45 million shares traded on the 17th. On the 18th, 53 million. Yesterday, we did 26. Today, we did 25. Gold contract. This is where it's going to get really interesting because what we did have, and we got our man, Mr. Andy Heck, coming up next because Andy's got a Tuesdays and Thursdays, got a great show right after me, 5 to 6. Gold had the chance, folks, to jump off the cliff last Friday. I mean, it was looking over the cliff. Thursday, gold closed at 10.49. The low is 10.45.40 in this contract. Now, it was like, oh man, 169,000 contracts. You were trading into 174,000, so that's lighter volume, but you can say it's really the same amount of volume, which is always dangerous. It's particularly dangerous coming to a Friday. What did gold do? Guess what? It rejected lower price, goes topside, which is totally counterintuitive into the aspect of what you'd think would happen when the Fed went up on rates. That was impressive. What was more impressive, however, was how gold traded yesterday. So gold on Friday went from 1050 to 1071. We did 121,000 contracts. Yesterday, we do 122,000 contracts. We get to 1081. Now, this is why it's more impressive yesterday. We're in holiday trading. And when you're in holiday trading, if you're in this case here, gold was going higher and the volume was going up. That's how market's supposed to work. You're going against a 1088 high. That's very hard to do in holiday trading. That's what's so impressive about it. Today, what you have? You have a pullback with 74,000. That is a nice setup to go into this 1,088. 1,088 from December 4th. That is the high with 209,000 contracts. You know, it's going to get tested. The real key is, does it get up and over it, and does it have juice as it gets up and over it? Because the way that came off the lows, that broke the downtrend that had been established since 1192 in gold. And the deviance is there, and it's there in spades. And it's not just in the gold and silver market. Where the deviance also plays out, folks, is in the bond market. So if we pull over to bonds for a second and we take a look at bonds, bonds also moved higher with volume. They're moving lower with lighter volume right now, and they want higher price. You know, that is a textbook that you'd have to throw out the window, because the textbook theory would be that the Fed's going up on rates, that bonds would go lower and the dollar would go higher. Well, guess what? The dollar's not going higher either. So fundamentally, when you put that together, it's looking to me that somehow inflation is rearing its head. We know we haven't had inflation in years. You know, fundamentally what has happened is that with China, the amount of goods we've taken in for China for 20 years, you know, that just brings costs down on a dramatic basis. You know, we'll see where this is going to shake out. But every which way I even spin this in my own head, it's like, you know what, man, inflation, well, it feels to me anyway, inflation in food and rent structure is out there. It has been out there for a long time. If you have to eat good food, if you have to eat vegetables, you eat meat, you're paying, you know, up the yin-yang for them. You eat wheat, yeah, you're going to pay nothing, you know. If we take a look at the dollar index, what you have with the dollar is that December 4th, when Draghi came out in Europe and decided he wasn't, well, he may have never wanted to extend or extend. I mean, okay, so the monetary stimulus, the market was looking that he was going to get more monetary stimulus. He didn't do that. That croaked the dollar. That dollar went from 100.7 down to 97. Huge volume on the way down. Then we did the counter trend bounce. You got, when our Fed went up in rates, you got up to 99.34. Now we're back down with lighter volume. You know, so the bottom line is that in both cases, it's like a small consolidation that's in here. The bottom of that consolidation is 97.22. I do expect that that 97.22 probably is going to get tested. We'll see if, in fact, it gets through that area. When we're coming back, good old Nike. Nike is going to be coming out with numbers. And the last time Nike did come out with numbers, they were big numbers. The way it's looking to me right now is that Nike probably will trade down about $5 to $6. You know, Nike went to a higher high, had lighter volume on the monthly. That sets up a pullback. So we'll see where that shakes out, and we're going to see where that shakes out in all of 1 minute. How cool is that? You stay right there, folks. Andy and I are going to be coming right back.